the bunch of PLI schemes rolled out over the last 24 months, and now the FTA signings that are happening with various parts across the world, right, to give a boost to manufacturing. How what is your view on how big or small can this theme be, or already is, so to say?
The concept and the theme can be pretty big and long lasting than what market seem to be suggesting. Market is of course appreciative of these moves, have started factoring in some of these trends into the near term forecast and valuations, etc. But if it really takes ground, if it really picks up momentum and all the building blocks get set up in a very positive and constructive way, you would see a much more longer term evolution of this theme. Why I say that is, from a very, very bigger picture perspective, the world is shifting gradually away from only China manufacturing policy to China plus one or China plus two, which we all have discussed. And we are seeing it manifest in small forms. Our export is doing a lot better. Not only our exports, some of our nearby countries' exports, be it Vietnam or Bangladesh, whichever economy is managed relatively better. And their export performance seemed to be much better than what it was earlier, which seemed to suggest that there is a shifting sand of global trade and global manufacturing. That is very important. And I think India, through its PLIs and the FTAs, seem to be very keen on capturing this trend. They want to be seen as alternative to China-centric manufacturing, not on all breadth and length of product landscape, but on specific areas where we have certain amount of core competence, where it is the gap between India and China technologically is not very high and can be bridged very easily. And those are the areas I think India seems to be focusing on. And that will bear fruits because that is the necessity of the time, because the cost factors of production have become more expensive in China, and therefore global manufacturing will relatively shift, both for economic reasons and as well as for de-risking reasons. I think how well India captures that, makes best use of that, is yet to be seen. But I think the intent is clearly there. I think the effort is beginning to get made, and the more we see such things happen, we would actually, it will become a big snowball effect on our overall export scenario, import substitution, net export, whichever way you can call it. We have an ambitious target, some $500 billion by next 2-3 years. I think it's good to have that kind of ambition, even if we reach halfway into that. I think it'll be a good job done. So this is for real. The sum and substance is this is for real. Companies are making investments. More companies will join the bandwagon, not only Indian companies. I think overseas foreign companies too will join this particular effort. And India is part of the global shifting sands. So we just have to make best use of it.
So how are you portfolio positioning for this? Your conversations with companies or with policymakers leads you to being constructive on what within this very large segment?
So there are the industrials. Clearly what happened was manufacturing, industrials, domestic cyclicals were predominantly considered, has been ignored for a long time within the domestic portfolios. People are happy playing consumption trends as well as select export trends kind of a thing. So whether it is consumer staples, consumer durables, consumer proxies, consumer services, it's all various forms of consumers. Consumer thing only was focused, whereas manufacturing and other things were essentially given a go by from an investment world perspective, and rightly so. They were not showing earnings growth for 6-7 years and struggling to grow, etc. But I think this is going to change. I think the market is going to become more broad-based in its earnings nature. If you really look for a medium to longer term kind of a view, you are going to be able to find more interesting ideas across both defensive spectrum as cyclical spectrum. Cyclical means I'm not purely talking about global commodity cyclicals, but domestic economic cyclicals, as I would call it, whether it is automobile, auto ancillaries, engineering and capital goods, construction and cement, various such ecosystem of value chain, where both for domestic as well as with a view on exports, chemicals, specialty chemicals, pharmaceutical active ingredients, etc. So we do think that as opportunity set is become bigger, wider, the potential for winners to be picked is more from more sectors, from rather than from very narrow sectors. The of course the flip side of the argument is the valuations will have to rebalance itself. I think the over attention that we paid to consumer proxies, the over valuation we paid for growth, need to kind of readjust itself. And if this momentum picks up, and we will see it happening faster. Currently, it is in its early form, what we are seeing. And whereas if the rebalancing thing, as I kind of articulated now happens, you would see it happen more faster.